Hello, and welcome to the Unpacked and Empowered Plus Finances podcast, a space where we dive into personal growth, financial empowerment, and real stories from fellow newcomers navigating life in Canada. This podcast is your go to for self improvement tips, financial literacy, and authentic conversations with inspiring individuals, whether they're building businesses, managing careers, or sharing their expert insights to uplift our communities. In this episode, I interviewed Jim Chamberlain, a licensed personal financial planner, to unpack practical insights that can help newcomers and young families build a stable financial future. Whether you're just starting your new career, navigating life as a newcomer, or simply want to be more intentional with your money, Jim offers practical insights drawn from decades of experience. Here we talk about the value of holistic financial planning, common money mistakes to avoid, how to align your finances with your goals, and why working with a licensed professional in finance makes a difference. The views and opinions expressed by our guests are their own and do not necessarily reflect the views of Unpacked and Empowered Podcast and Marian Agudo.
Thank you so much. Well, I met you online via Facebook groups. I know that you have 35 years of experience in the financial services industry. What inspired you to help families, especially newcomers, achieve financial security?
I'll preface it by saying, yeah, I've been in the industry for 35 years, and I've had the privilege of training and mentoring brokers over those 35 years on different products. So it gives me the ability to speak with a little bit of knowledge of what takes place. And in the last probably 7 years, I've had the opportunity to work with one of the MGAs with newcomers that have come into Canada. And I'll tell you, that was one of the best group of people I've worked with. The first one is after spending, like I said, so many years in this financial service industry, I've realized that many newcomers usually face unique challenges in understanding how to navigate their financial landscape. And the drive to help families came from seeing how important financial security is for building stable and prosperous futures. It's really more about just it's not it's more than just about money. It's about ensuring peace of mind and opportunities for families to thrive in their new country and new communities. Um, so that's kind of like the answer I would have for the first question when you look at it.
Totally. And also, I realized that with us newcomers, I mean, I would still consider myself as a newcomer. One of the most important things is that we left something really big behind,
Hmm.
or some of us might even have left a different opportunity, but we chose to go here for a better opportunity and just to check out if are going to work out for us. So, given that, I know that it comes with a lot of struggles as well. And based on what you've seen so far, based on your experience, what are the biggest financial mistakes you see immigrants are making when they first arrive?
So when I worked with these particular brokers at this particular MGA over the last 6 or 7 years, I got to hear some stories, and really the most common mistake that um, I heard was that newcomers really rely heavily on employers' insurance and government benefits. They often underestimate the need for really personal financial planning and the need for protective coverage. Another mistake is not building credit early enough where they can affect their ability to buy a home or even secure loans in the future. It's also a mistake not to seek professional advice as soon as you can when you get here. And many think that they can navigate the system on their own without really understanding all the opportunities available and can miss out opportunities for growth. They try to do it themselves, so it can be very tough.
Yeah. I think it's leading to the second question as well. One of the myths that I seem to like notice is that getting financial help, like looking to speak to a financial advisor or a life insurance advisor, is something that, okay, maybe I have to pay for that. I'm just gonna figure it out myself. So I think that's one of the myths that we believe. And what are other common myths that you see about financial planning and insurance that you'd like to debunk for new Canadians?
Well, to be quite honest with you, it's just not new Canadians that have a myth in the back of their mind. A lot of times, the myth is that financial planning and insurance are only for the wealthy or established families.
Right.
And in reality, everyone, no matter their income, needs really to plan and protect the future. Another myth that is really an interesting one is that provincial health care or employer benefits are enough to cover all their needs. It's important to really have an additional coverage like life insurance, critical illness, disability, because these benefits often don't cover the health issues and have significant coverage. So it really needs to they need to look at other coverages to provide more support for their families.
For a new family just starting out in Canada, what are the first three things that you would think would be the good financial steps that we should do to secure our future?
The first, I would recommend setting up a budget and understanding where their money is going each month. That's really important, and to understand how much budget they actually do have, and it helps to track spending and ensure that they're not overspending. The second thing would be, excuse me, newcomers should really focus on building their credit score as quickly as possible because they are new into the country. And it's critical for everything from renting a home to getting a car loan. And finally, they should really invest in basic insurance plans, like I mean, life insurance or health insurance, and some form of long-term savings. Along with that, it just shouldn't be one or the other. It should be both in conjunction with each other. So long-term savings, like registered savings plans, RSPs, these steps really create solid foundation and financial security. And that goes for brokers as well. They shouldn't be just looking at only selling life insurance to their clients, but they should also be looking for the opportunity to go hand in hand, looking at RSPs and life insurance together. And it's really important to do that because many families only rely on one side of the fence rather than both sides. So you got to have a balance.
And you mentioned earlier about most of the families, but I think not this is not just immigrants in general, but more on even Canadians who are here, who were born here. A lot of families rely on government benefits or like government pensions, thinking that that could help us survive. Why is that not enough? Why do you think that's not enough? And what should we do instead?
Well, when you look at it, government benefits and really employers insurance are important. They often don't cover all the necessary financial protections that you spoke about. But if you look at, for example, the government benefits may not cover the full cost of healthcare, especially for long-term illnesses or critical injuries. Employers insurance is usually limited to employees only and doesn't necessarily extend to the families and provide long-term financial security. So to fill those gaps, I really recommend personal life insurance and critical illness insurance and disability coverage. These give families really a peace of mind and protect them from really unforeseen circumstances. And when you look at the government programs, especially for retirement purposes, I mean, we've only talked about life insurance and critical illness, but for retirement purposes, you need to look at RSPs and savings to be able to retire properly because you can't rely on CPP and old OAS, especially for people that are new to the country, because their benefits are going to be very, very low. So they have to rely more so on themselves to be able to do that than the government. And even even for Canadians that have been here like myself for many, many years, all my life, a lot of times the government programs are not significant amount of money to be able to retire. So everyone has to really plan for the future.
Yeah, you definitely touched on something that I've always thought about. Because, say, for example, in my case, I've, I've landed to Canada 2018, and now I'm 39. but I don't have much contributed to CPP, so I'm pretty sure I'm not going to be able to rely on that kind of pension. So I have to keep up something for myself, or even maybe okay, maybe I should retire to the Philippines in the Philippines, but then I'm not going to be able to get the benefits that we have here, our privileges here when it comes to medical care and stuff like that. So it really is something to think about. Thank you for
Yeah,
mentioning it.
yeah, because
Um,
when you look at CPP, even for Canadians that have been here all their lives and worked all their lives and went to retire, the average CPP that people are only getting is only about 640 some odd dollars. That's the average.
no, no.
Uh, and $640 a month doesn't go a long ways anymore. So yeah, it's really important to look at their own planning to be able to augment that minimal income that you can get from the government.
Okay. So you mentioned like getting people to supplement what their current coverages are with employee, like what they're getting with the employers. And then talking about life insurance, critical illness, and disability, how should a family decide which coverage is right for them?
Always a great question to ask because what is the right coverage? And it's always going to depend on the individual family or the individual themselves to meet their specific needs. So one of the things that when I first got into the business, they taught us that cover the need.
Yeah.
And you got to discover what the need is. And everybody has a specific need, whether it be for life insurance, critical illness, disability, RSPs, all those things. And for life insurance, the family should consider how much income replacement they would really need if one of the primary earners really passed away. And one of the formulas that we use in the industry is your annual income and by 10 times. And that kind of gives you an idea how much insurance coverage you might need. Now, critical illness insurance is really crucial if there's a risk of major medical conditions. Now, there's actually a higher risk of, if you look at the percentages, there's a higher risk of becoming critically ill or disabled than there is for dying. So you have to look at the pros and cons. But for the most part, life insurance on an individual is the most unselfish purchase anyone could ever make because they're not buying it for themselves. They're buying it for their loved ones in case something happens to them. So really you have to determine those things with your advisor and with the advisor with the client. Make sure that you've really looked at all their financial obligations, such as their mortgage, education costs, lifestyle needs, and really choose the coverage and the protection that's really going to suit them for that particular moment. And always keep in mind that you need to have the future in mind when you're looking at products, something that can be converted, something that you can
Yeah.
purchase more of, and all that type of thing put together.
Thank you. Now, when it comes to savings, what do you think are the strategies that new Canadians can do to balance savings for emergencies? Because of course, we also moved here for better children, to better our children's education, and then again, we have to think about retirement without feeling stretched too thin.
This particular answer, this question, the answer could be go on for a long time. It's a question that begs a lot of conversation because savings, when you say can overwhelm, especially high living costs. Well, I mean the cost of living is continually changing right now. We've seen rampant inflation over the last 5 years. We've seen uh, goods and services change. Everything comes with a cost nowadays. So but it's all about setting priorities and starting small. You have to start someplace. Don't get overwhelmed. Start small and work your way up. And I would recommend really setting up an emergency savings fund first, aiming for at least 3 to 6 months of living expenses within those emergency savings fund, and then gradually start contributing to the child's education fund, RSPs, like that you and I have talked about in previous times we've had a talk, and while simultaneously making contributions to their RSPs. Even small amounts add up over a period of time. So a good strategy is automating savings so that the money is taken out automatically out of their bank account. And that way, this won't feel a strain as much as it becomes part of their daily routine. So it becomes a routine in their lives. So that's only a small part of the whole thing. So, but you noticed I mentioned first, put up that 3 to 6 months first, and
Yes.
then and it's almost like if you take an analogy of a plane, that if you're sitting in a plane and you're traveling across from Philippines to Canada, something heaven forbids to happen to the plane, and the oxygen masks drop, right? What do they tell you? They tell you to put the oxygen mask on yourself first,
First.
and then put it on the child or an elderly parent. So you always got to take care of yourself first. And that's what that 3 to 6 months does. It gives you and the family coverage. So if something does happen, you can continue on. Then you look at the education and the life insurance and the RSPs and all that kind of stuff.
Yes, that's a very good illustration, actually. Putting like taking care of yourself first, saving yourself first,
Yep.
before, of course, we look at our loved ones. Now, what's one simple financial habit that can make a huge difference in a newcomer's financial future?
I think one of the most impactful habits is consistently setting aside a portion of every paycheck, no matter how small. Start small and work your way up, but no matter how small, whether it's for an emergency fund, for retirement, or savings, for a major goal, putting money aside every month, because even small amounts, they compound and they add up, and they provide a solid foundation over a period of time. Uh, Really, the key is consistency. It's not the amount, but consistency. Yeah.
All right. And have you ever encountered like can you share a success story of an immigrant you've worked with who transformed their financial future?
Well, I can't necessarily talk about what I've had, as an experience, but I can relay a story that I recall that one of the brokers had, and they were working with a young couple that had recently arrived from India, I believe it was, and they were struggling to get ahead because they weren't familiar with obviously the Canadian financial system, and they didn't understand how to build credit or to really to save effectively. So this individual tried to and was successful helping them do that first thing, setting up a budget, help them to work on their credit score, and got them into an RSP, and a savings plan, and consistently did it. Within 3 years, this broker had told me that they had enough down payment on their first home, and they had actually built an emergency fund, and they had established their credit. And they also have a new life insurance policy that this individual sold them. So 3 to 5 years into the country, they had the feeling of financial independence. So it's really amazing to watch brokers work with their clients to do that type of thing. Because in my experience, over the last 35 years, for 22 of the last 35, I really didn't necessarily work with the clients per se. I worked with the brokers, and the
Okay.
brokers were the ones that had the stories. So that's kind of the things that I saw with brokers working with their clients.
Well, that still makes sense because I mean, you work with brokers, and a lot of them are also like some of them could be immigrants, some of them are like started as students here and then went on to their career in the financial industry. And if you could just give one piece of advice to every new Canadian looking to thrive financially, what would it be?
Again, it's wouldn't be just to the new Canadians; it would be to Canadians in general, in the sense that
Yes.
my advice would really be to start early and get educated in the financial tools and systems that are in place, whether it's building your credit, whether it's savings or investing. Don't wait for the perfect moment. Everyone thinks that
Yes.
they have to wait for the perfect moment. Uh, Start with what you can and be really consistent. As I said earlier, consistency is the key. Surround yourself with trusted advisors, brokers that can work with them, and look for advisors that are improving their own education and improving themselves. Really take the necessary steps for your family moving forward to have that financial security, because it's not a luxury, and it's something that every family deserves, and they should start taking the action today, not tomorrow. In our industry, people always ask the question. Don't know if you've ever heard of Warren Buffett. Warren Buffett always gets asked the question, when's the perfect time to invest into the market? And his answer is always the same: today.
Today. Yeah,
No matter what
absolutely.
the market does, today is the time to invest. Yeah.
Thank you for your wonderful advice and thank you for your time again, Jim.
Oh, it's been my pleasure. I hope this has been helpful, and all the best of luck.
Yes, this is going to be very helpful to us. Have a great day.